Welcome back to Radically Rational Radio. Today we're going to cover an interesting article where Robert Kiyosaki calls the next bank failure. If you haven't read Rich Dad Poor Dad, this man is a true mentor for me and really changed my whole mindset on how to think about money. Let's get right into it.
And the problem is the bond market. And my prediction, I called Lehman Brothers years ago, and I think the next bank to go is Credit Suisse. And if that happens, Japan
because of its exposure to a lot of this.
Yes, because the bond market is crashing. All those bonds. Let's say you're getting paid 5% for a bond, and it goes to 10%. The 5% bond crashes, and the bond market is much bigger than the stock market, as we know. So
Absolutely.
The Fed is the problem, and they're what they say, the firemen and the arson.
And they are not wrong. The bond market is much bigger than the stock market. If we're talking about bonds, we're talking about government treasury bonds, 10-year bonds that they sell for massive amounts. The bond market does heavily control how valuable a bank is. They like to put a lot of the money that they're holding into long-term bonds because they are considered safe assets. Interest is rising. A bond is a safe asset, but it doesn't make it valuable when its value is half the current day's market interest. Credit Suisse is a global bank. Europe's probably pretty scared. I can only imagine what's happening. We're going to keep watching this, and I think Credit Suisse is going to get bailed out. If you like this content, please like, subscribe. I'd love to hear a comment. Let's see where we go. Thanks for being with me.